Good morning, everyone. Calling the Board of Directors Audit Subcommittee meeting to order, October 27th, 2021. It is 10:02 a.m. and we need to start with the approval of the minutes from the May 27th, 2021 meeting. Has everybody had a chance to review them? I would entertain a motion to approve them.
So moved.
Okay.
Second.
Yeah, wonderful.
Not having been there, but
Yeah. None of us were there, but
That's okay. Any discussion, comments, questions? And if not, we can take a vote. All those in favor signify by saying aye or raising your hand.
I
Aye.
Opposed? Unanimously approved. And I believe today we have Valerie Colliman from RSM to give us the FY 2021 financial audit report.
Absolutely. We have a presentation that Andrew will project. And we'll take it. Thank you.
Second.
Yeah.
Yes, wonderful. Hopefully everyone sees this pretty clear. So We'll start off by our opening remarks as it relates to thank you again for having us here for the 2021 fiscal year audit. Not sure if there you go. So we're pleased to present this report and this presentation to you to help you, those charged with governance, with your responsibility, as well as answer questions that you might need or have as it relates to the financial position of the service. Our presentation will have this contents, so we'll go over the audit of the service, as well as some other items. So the key areas of the audit of service is about 8 to 10 slides, and some other items that are pertinent for your information at the latter part of the presentation. So the audit status, our opinion in those financial statements is expected to be unmodified, which basically translates to a clean opinion. And it will be dated at the completion of the certain matter of reviews noted here. So we do have a process of quality control where it goes through the complete team as well as the engagement lead. And we bring in a second partner that does what is called a concurring partner review. So that is in the process at the moment. We'll also have a conversation with management as it relates to any subsequent events that we should be aware of that might potentially have a need to be disclosed in the financials. And it also will provide management a representation letter where they attest certain representations. And once all of that is completed, we will finalize our audit. But at the moment, we are expected to issue what is deemed a clean opinion. Additionally, just one more prior to that, thank you, Andrew. Additionally, we have completed most of our uniform grant guidance audit, which is deemed a single audit. This is where we audit the schedule of expenditures of federal awards. The service is a recipient of many federal awards. We take a look into the compliance of those particular awards for that given year. That is expected to be unmodified as well. We have not found any issues to report as it relates to compliance to those awards. And there's a few other items that we complete as it relates for the service. There's a schedule of indirect costs and a schedule of 6 customer report of indirect overhead costs. We will work with management subsequent to the financial audit to get those completed as well. So just to remind everyone, our professional responsibilities, we did outline this under our arrangement letter dated June 21st, 2021. So we do follow auditing standards generally accepted in the United States. And when you take a look in our opinion, when we issue, there will be a few things that we summarize as it relates to our professional responsibilities. A few things I want to point out. Our audits were designed to obtain reasonable rather than absolute assurance about whether the financial statements are free of material misstatements, whether caused by error or fraud. So it's always reasonable rather than absolute assurance. We always like to ensure everyone understands that concept. Additionally, the procedures that we select and perform are dependent upon our professional judgment based on our assessment of the risk of material misstatement and our consideration of the internal control over financial reporting. So the tag team of those two helps us design our audit procedures. And it's not for the purpose of expressing an opinion that the controls are in place and are effective. We don't express any such opinion, but it's just for us to have an understanding of the controls of the organization for our risk assessment evaluation overall. So we have issued a separate communication, and this outlined our scope, our timing, and our identified significant risk. That was issued back in June, just to remind everyone as it relates to what we identified as the significant risk for this organization. The first two, management override of controls and fraudulent revenue recognition, is always a staple in every audit. We're always worried about the ability for management to circumvent any sort of controls in place. So we do take a look into that if there's any areas that we've seen any journal entries that had a certain cadence of approvals that management was able to override, as well as fraudulent revenue recognition. It's always an area of concern. Is there a way for management to manipulate any earnings, any effect in the P&L? So we didn't see anything of that nature to bring forth to this audit committee. As well as there's three others that are very specific to the organization that we deem to be significant risk of material misstatements. And really the nature of this is because of the estimation of these particular balances, and they're pretty large on your statements, as well as the utilization of external experts to help you come up with these balances. So the OPEB liability and the pension liability, those are numbers that come from the state. They utilize their actuaries for that. We do take a look into that. And the OPEB liability actually is another section within the statements that we have conversations with those that put together the assumptions and the key points. We utilize our experts in the actual side to come up and kind of say, yes, the liability is reasonable. And then the last one is due the nature of the organization as a whole, the landfill closure and the post-closure cost liability. Your use of that specialist is another area that we focus on. So these three balances is really because of the nature of those, the ability to fluctuate year over year, that we take a look into a little bit more deeply and deem these to be significant risk. Some matters that we discuss with management, we always have a conversation as it relates to financial statement disclosures, the valuation and disclosures of the net OPEB under certain GASB standards, GASB 74 and 75, the pension liabilities that come through from the state under GASB 68, and then the impact of policies, controls, and reporting under any new work from home environment. So we've had those conversations as it relates to this past fiscal year and the impact overall to the statements. Some good news on your end. Management, we always like to indicate management has the ultimate responsibility for the appropriateness of the accounting principles used by the service. And you guys did not have to go through any arduous, implementation of new accounting pronouncements this year. There is one that I'd like to mention at the latter part of the presentation for you to look into. But overall, many of the 630 governments had to implement GASB 84. That was not something that was needed to be implemented for the service, which was a nice load off of everyone's back. So I'm going to turn it over to Andrew to discuss a little bit more about management's judgments and the accounting estimates.
Perfect. Thank you, Val. So the next few slides will go over the significant management judgment and accounting estimates that we identified during the audit procedures. Valerie already discussed several of them on the previous slides related to some of the significant risk areas we looked at, such as the pensions, OPEBs, and the landfill closure costs. The primary reason for highlighting these is because these are areas that are susceptible to significant management estimate or inputs, and also have material impacts on the overall financial statements. For purposes of this presentation, this is really to just walk you through what we identified as management's overall process, what we deem to be, whether those items were deemed to be reasonable or not from our assessment. And these are really just meant to highlight areas that as a committee you can evaluate on an ongoing basis to essentially ensure that those continue to be reasonable moving forward. So the first two items on here relate to the allowance for doubtful accounts and the overall depreciation method used for asset useful lives. For the allowance for doubtful accounts, this is something that management reviews on a regular basis to essentially identify if there are any specific items that need to be reserved for You can see that the reserve increased for year over year, but this is an area that gets evaluated year in and year out. Typically, the majority of the work is done with state or municipalities, which there are not significant recoverability issues. However, it's still reviewed on a case-by-case basis. We believe that the general estimate that's in place at the end of the current year was reasonable and in line with the overall accounting guidelines. The second piece was just looking at the depreciation method and useful lives associated with the significant capital assets at the organization. This is really, they use a straight line basis. It can range anywhere from 3 to 40 years, depending on the assets. We found that the depreciation methods used in the current year were consistent with prior years and with similar assets within the industry. The next two here relate to items, again, that Valerie had already spoken to previously, so I won't go into any huge detail on these, but these are effectively the accrued landfill closure and post-closure care costs and the net pension liabilities. Both of these management utilizes third-party experts to assist in assessing what the liability should be at the end of each fiscal year. As part of our process, we also engage with proper specialists internally on our side to essentially evaluate whether the inputs and estimates used are reasonable. And in each case, we found that they were for the current fiscal year. Finally, another item that Valerie has already mentioned previously relates to the net OPEB liability and related expenses. Similar to the two items on the previous slide, these are also primarily based on inputs provided by management, but the estimate itself is developed by actuarial specialists. So again, we basically review those inputs using our own specialists to evaluate whether or not those are all reasonable. Once again, during the current year, we found that it was. The next few slides are really going to go through just some required communications that are necessary to convey to you as part of our completion process here. The first one here is to really just note that we did not identify any recorded audit adjustments or uncorrected misstatements during the process. What this essentially means is that the financial information that management provided us with is the same financial information that was used to prepare the ultimate financial statement. So there was no material errors that were either corrected or left uncorrected based on our audit procedures. A list here of a few additional required communications. So for preferability of accounting policies and practices, there can be situations under GAAP where management has the option to use differing or preferred accounting policies or practices. In general, we reviewed all of the accounting policies in place and found that they were all reasonable in line with expectations. So no deviations to note or disclose there. Similarly, we did not note any alternative treatments that management utilized or deviated from GAAP during the current year. We had no disagreements with management. On the contrary, once again, they were very open to us, very available. We continue to, everyone continues to have some difficulties with the remote environment. We unfortunately were not able to be in person at all during these audit procedures. However, management made sure that that was as smooth and seamless as possible. So we certainly thank them for that. We're not aware of any other consultations management had with outside accountants, specifically related to other audit or accounting matters. And we encountered no difficulties in dealing with management when performing the audit at all. The final slide here before we move into a few other closing items is just to summarize any findings associated with the single audit that was performed related to the federal grants. This is to really just inform you that no findings were found relating to the federal grant programs, and we encountered no compliance issues under the OMB uniform guidance, which again specifically relates to federally funded programs during the current fiscal year.
So one slide back, Andrew, I just want to make some clarifying comments on one item, the last bullet point. So currently, as we noted, we do perform the single audit under the Uniform Grant Guidance Rules issued by the OMB. There are 2 addendums that the accounting professionals are expected to receive from the OMB as it relates to fiscal year 2021 audit. So we are at their mercy at the moment. So once we get those addendums, that's when we'll be able to issue our financials, or I should say the Uniform Grant Guidance single audit report. So this is the last 2 years been pretty much normal for OMB as it relates to issuing subsequent addendums to help the auditing professionals as it relates to the requirements for federal grant audits. As you can imagine, with the influx of federal funds pushing through the states and all sorts of different agencies, they're expanding the requirements as to what we'd like for us to review when we do these audits. So we're always waiting for extra compliance addendums before we're able to fully issue. Should that change, or should we get any sort of word that we're able to issue without any of these additional addendums, I'll be sure to coordinate with management so we get that out the door. But at the moment, that is pretty much what a lot of the firms are doing, holding still in case there's something OMB wants us to look at in these addendums that they specify that we have not done so yet. And the last one is just for you guys to have on the radar. There is a pretty massive GASB that's to be implemented next year. It's the leases standard. So it's pretty much catching up governments to what the for-profit world has been dealing with. So this has had superstitions, like they've put it out, they've said, no, we're gonna hold off a little bit, but it's catching up to us. Now we have to implement it. And I just wanna make everyone aware, have management kind of do an assessment as it relates to any sort of leases that they might need to add to the book, both on the asset or liability side. This is pretty much putting things that were operating leases into capital leases if they meet certain criterias. So I will work with management as it relates to their ability to do some assessments to just say, okay, fine, we don't feel like this is going to have a major impact, or we've looked at all of our contracts, all of our leases, and have seen that this is what the effect of GASB 87 will be. So this is just an FYI for now, but this is pretty much a big standard that a lot of the governments are looking into at the moment. And lastly, just to say, the other 2 main reports we'll work on is the schedule of indirect costs and the schedule 6 customer report of indirect overhead costs. We'll work with management as it relates to getting that support in order for us to issue those 2 reports. And that pretty much wraps up our presentation. Of course, like we indicated, thank you so much for another seamless year, and we're more than happy to answer any questions at the moment.
Thank you, Valerie and Andrew. Are there any questions from anyone?
I don't have a question of RSM. I have a question of Charles. Would this be the time, or just
Sure.
right?
Sure.
Just so I understand, for instance, a couple of changes in projections, like the allowance for doubtful accounts, the increase from 50 to 450. Is that something that we should be concerned about, or?
I don't think we should be concerned. Mr. Coleman or Mr. Patel can chime in, but they are related to known cases of difficult to recover accounts.
Okay.
And where
you've mentioned a few of those before. Are those the same?
They are the same. They are the same that you've been presented to at the board meetings.
And the OPEB, the change in the OPEB?
We have a very small, for the size of the organization, I believe it's only about 9 employees that are in the state pension from legacy and the AG's office. But the rest of the 750 employees are not in the pension system. So that is related to the liability associated with about 9 employees that are still in the state system.
And the leases issue, the GASB 87.
I don't think that'll affect us much. We don't have very many leases as an agency, and we're getting out of a lease. We adjusted. I don't know if you were on the board when this was last presented, but we have transitioned out of lease space that is next to the building. And we have moved to a permanent accelerated telework as long as we meet all of our metrics. So, which I will be attempting to calculate the lowering of carbon emissions from less commuting for employees. But we stay at 50% capacity in the headquarters building now, and we're making adjustments in the headquarters building to bring in conference training from the lease space next to the building. And for all other properties, we're generally leasing through clients. So we're on client property, we're not in a lease property, or we're being directed to lease. And Ms. Patel.
So those are all
state property.
appropriately operating. Those are operating costs rather than capital.
Yes.
Thank you.
You're welcome.
Any other questions? Okay, thank you, Valerie and Andrew.
Thank you.
And I believe we are now ready for our next type of audit report, and that would be our internal auditor report with Winsome Condra.
Good morning, everyone.
Good morning.
Pam, thank you. All right, this morning, my purpose this morning is to go over the overview of FY21 audits, discuss FY22 internal audits, that's planned, and review the fraud outline log, and then talk about next steps. So beginning of FY21, the first audit that we performed during from the audit plan that was approved by the board and audit committee was the MERF material recycling facility contract compliance review at the Montgomery County. The audit report was issued July 30th, 2021, and the scope of the audit was we reviewed the administration and billing of the MERF agreement between Montgomery County and MES, ranging from July 1st, 2018 to June 30th, 2020. Sorry about that. And I'm gonna discuss the audit results. Next. So when we review the audit, we gave this an ineffective low materiality, and this is due to these key findings. Next. So the key management issues that we found was there was a missing inventory management processes. There were inadequate commodity customer onboarding controls and some purchasing anomalies. And the reason why it was given low materiality because it was in terms of the value, it was really low. It was under $1 million. So what we did at the end of the audit, we met with all of the managing director for that at environmental operations, and we discussed the recommendations, and then they came up with action plans to satisfy the audit recommendation. In a year or so, we're going to perform a follow-up on the action plans that were implemented to ensure that they were implemented, right? One, and then the controls are actually working. Any questions? Okay, next slide, please. The next audit that was on the FY 2021 audit plan was the review of the Cox Creek Expanded Construction and Demolition Agreement. This audit is still in progress. The scope of the audit is to review the construction management and billing, which may involve the review of subcontract agreements of the Memorandum of Understanding between MDOT MPA and MES during the period July 1st, 2019 to June 30th, 2021. Next. At that time, we issued a planning memo, and then the planning memo, we provide audit milestone dates, and these are tentative dates in terms of when we're gonna issue, when the open meeting was performed, when the risk assessment is gonna be completed, and this is basically the planning phase of the review, and then audit testing completing date, October 28 in 2021, and then the draft report issued and final report issued. However, these dates are, this audit is being delayed because there's an unplanned audit that's being performed, which kind of supersedes that. So we're looking to have the report, the final report by the end of this year in December. Any questions? Awesome. So in the beginning of FY22, before the FY22 began, met with all the managing directors to confirm the planned audits. And these audits were approved by the audit committee and MES board within the risk assessment for FY21 and 22. So as you see here, we're planning to do, because we have started an unplanned audit. None of these audits listed have begun as of yet. But however, the first one on our list will be the review of operations at the Rocky Gap Casino. It was anticipated that we would begin October 21. Because of unplanned audits, it probably would begin in December. The next one we're looking at is the BWI maintenance shop. It's anticipated to start in April 2022. Also, the site management review of Popular Island operations. We're looking to start that in February 2022, and review of Hartford site management to begin looking at that June 2022. Again, I'm an auditor of one. So these are a lot of the wish list from the managing director, and it's based on I prioritize by the dollar value of the audit, and also again, management request. Any questions? Thank you. So for FY22, as I mentioned before, we have a unplanned audit that's going on currently, and this is the review of service center process. The scope of this audit is to review the service center process from creation to cost recovery during the period July 1st, 2019 to June 30th, 2021. Next slide. We performed an audit opening meeting September 20th. We are in line to complete the risk assessment on October 29, 2021. Also, audit testing, we anticipate that the audit testing will be completed in December 10th. Draft report issued December 17th, and the final report issued December 29, 2021. We're in the planning phase. Any questions?
Sorry, yeah, I'm new here, and I apologize. I'm confused. You're in the planning stage of the assessment.
Yes.
To be
so
completed last week or this week?
No. I'm in the planning phase and looking to be completed by Friday. The planning phase, where then I will begin my testing phase.
Okay, so the risk assessment complete is part of the planning phase.
Yes, that is correct.
Could I just ask everybody, I'm sure knows, but just briefly what the scope of this audit is?
It's to review the service center process from creation to cost recovery during the period July 1st, 2019 to June 30th, 2021.
I read that.
Treasurer Cop, there is a, this is requested by me to the internal auditor to look at a billing system that's unique to MES called the Service Center. There have been some management actions based on my analysis of what these are. And there are some instances where I think service centers are valid. And there's some instances where they aren't. They include a separate fully loaded sheet that is included in contract agreements with some agencies of the state. And I need assistance from the internal auditor to give me another evaluation separate from other managers in finance to really get to the bottom of it. So it's something I'd love to discuss
Got it.
in closed session, but just to give you an explanation of what the entity is. So a deviation from
Thank you.
standard billable rates.
Yeah, and just to add to Dr. Glass, what I'm doing is testing the controls. During the planning phase, I perform interviews to management and to any individuals that are involved in the process of these service centers to evaluate whether controls are in place. Is it weak, or is it just missing, right? So my job is to determine the controls and test to determine if it makes sense or not, and give Dr. Glass and management an assurance that the controls are in place and they're strong.
Thank you.
You're welcome. Next slide, please. So the next item I wanted to discuss is the fraud hotline log. Before October 22nd, it was 0. I had a call last Friday in terms of concern in terms of favoritism during interview process. I'm currently in the research stage, and I'm meeting with the managing director for this group this week. So currently don't have much to add to this until further notice. Any questions? Next slide, please. So internal audits, next steps. As you guys, well, Mrs. Heller, you were involved last time in terms of the FY21 and FY24 risk assessment audit plan. I'm currently in the process of wrapping up my interviews with the managing directors. I've gathered data for fiscal year 21 to update the risk assessment for the 2 upcoming fiscal years, so we can have our audit plan. So I will distribute the same documents that I did around, that I distribute to the audit committee around April 2022. I am doing something different this time around. I am actually distributing surveys to other MES staff to get more broader feedback in terms of the risk at MES. So last year, because I was fairly new, I did it really quickly and wasn't able to send it out broader to the MES group. So this is a time for me to get that done, and I'm looking to send that survey out in December of this year. Any questions? All right, that concludes my presentation, and thank you guys for giving me the opportunity to present today. Thanks.
Thank you, Winsome. The The next item on our agenda is the financial policies to be reviewed, and I believe Dr. Glass is going to handle this part of the presentation.
I am. Thank you very much. So a recap for those of you that are on the HR committee or have witnessed, we've gone through the policies required in the MES Reform Act. One policy is not ready today, and I don't believe you've had a chance to review. Mr. Coleman is working diligently to complete it. The fleet management policy. So I'll present the other four today and discuss them in general. And hopefully we can, I don't know whether the chair of the committee will be ready to vote for them out or just have you read them, look at them for the next month. And then they do need to be approved by December. So we have one more board meeting. So the IT acceptable use policy. Oh, wow, good. Thank you, Mrs. Fuller. So in general, this policy is about the use of information technology equipment, phones, laptops, etc. How do we stand and effectively secure all of our devices as a team? How we, our approach to defending us from cybersecurity, but also making sure that no use of illegal aspects of the internet world are taking place. We don't restrict personal use completely, but we want to make sure that, as you see, downloading, viewing, storing, copying, or transmitting data or activities that reflect adversely upon MES, gambling, hate speech, legal weapons, etc., all those bad things. We don't transmit personal identifiable information, share confidential information, violate HIPAA rules, etc. Next slide. We want to make sure that we're not using unauthorized copyrighted material. We're not reproducing it. We're not exporting software, breaking our licenses, and etc. We also have the IT is structured to have a limited access in certain software systems, so that your access to those software levels are based on your need to access them. Obviously, with Workday and our HR and our financial management systems, we have rules for email communication. No, we don't want to violate our harassment laws, and reasonable personal use, as I said, is accepted, but it needs not interfere with work duties. And in the current environment with enhanced telework, that needs to be carefully managed. And obviously, people should not be using MES IT equipment for their personal use. Next slide. And due care for the IT resources of MES. People need to be accountable for things they access and the security of our network. And then we also have an acceptable use form that all employees sign. And now my screen is blocking the other form, and the privileged use form agreement. So that is the information technology acceptable use policy.
Madam Chair, could I, first of all, thank you for sending these ahead. It's really helpful, and I appreciate it. It seems very reasonable. Are these based on anything? Is there a model somewhere?
So, yeah, well, throughout this entire process, the policy project that was initiated last fall, every single policy was reviewed. Right. We've only included the sets that are required in the Reform Act right now. And Mr. Coleman and I will have to get through what we really feel is necessary to go through for the changes for the other 120 policies that we have. No, we have 130 something policies, and we reviewed them all. We compared them with DBM policies so that we are in sync, and where they needed to be enhanced based on our nature, they were enhanced. So everything is compared with the state and with, in certain instances,
That was my question. Okay.
industries that we work with,
If I
industries
could
that.
add, Madam Treasurer, this is not actually, it's not a new policy for MES. It's something that we've had in place for a number of years. It's been updated since the change in the Reform Act. But MES has had an acceptable use policy for IT equipment for a number of years. The original policy was modeled on both other governments and private sector, but I don't recall specifically which ones at the time. But employees have had to sign the forms that you see attached for a number of years as well.
No, I appreciate that. All the ones before us seem very reasonable. I just had no background in what to compare them to. But thank you.
So IT asset management is straightforward. All MES employees are given these devices to utilize. Some devices that are critical to work now that we're doing a lot of work from home have also left the office. So there are more printers. Obviously laptops and handheld devices were always used, but now we've also sent some printers home for people that use printers and print a lot of documents. So this is both about their physical location and communicating with IT when there are issues, and also the disposition of them at the end of employment. So every employee is expected to keep their technology in good working order. And if there's problems with functioning, always communicate with IT to make sure it's up to date, and then return the assets upon the termination of employment. So,
And I'll also add on this policy, you'll see there on the right-hand side of the page, return of IT assets. When an employee leaves MES employment, they must return their IT equipment.
any questions?
Curiosity, how many people are working from home, or what do you think the percentage is of time worked at home versus in the office?
So
Any idea?
MES has 505 last count essential services folks designated. So they are all at operational facilities. There are approximately 220 folks assigned to the headquarters building, and some of them are blended. Some of them have facilities within the region, or they, for instance, Mr. Laseco, who manages Midshore 2, comes into this building twice a week, but he's at Midshore 2 the other 3 days. I would put, we have been tracking entrance to the building, and we've never really gone over 80, 90 in a day. Our average is probably someplace around 60 in the building. The capacity, with a goal of never to go over 125. So if that gives you a gross number of the building. So of the folks that, so if I had to put an over under, I would say that out of 750 employees directly related to MES, or excuse me, not CB Chesapeake Bay Trust or Maryland Clean Energy Center, we have only 10% in the building per day. But
Thank you.
But 2/3 of them never come to the building anyway, or only come visit. So. Next slide. Expense reimbursement policy. This is related to travel and how reimbursements are managed. This largely tracks with DBM's policies on the amount of reimbursements. It is expected that all travel and lodging and meal expense are supposed to be within the business mission of MES. No reimbursement for other persons, family members, or other persons that are not MES employees. we stay within the reimbursement rates. Air travel is focused on the use of BWI as the main airport, and there is no upgrading of travel. There is a clause here that allows for business class for destinations outside of North America, but everything is supposed to be within the a reasonable nature. There is an allowance in ground transportation for the various new modes of travel, to include Uber and Lyft, but the most economical and convenient form of transportation is required in the policy. Employees should evaluate their lodging and find reasonably priced hotels. In cases of double occupancy, they can be split. We've chosen, MES has not used the state travel system on a regular basis, and we kept that way, but we kept that in the policy for the convenience and for people's purposes, but they do have to stay within economical costs for all of their travel. Meal status is outlined with including the time of the day and when you started your travel, and we stay within the per diem rates established by a DDM. So adjustments for high cost areas if you're in New York or San Francisco, but
Madam Chairman, oh, wait a minute. So I do find these difficult to go through. Don't get me wrong. So I probably totally missed it. But if you're at a meeting, is lunch covered?
So generally, if the registration fee included lunch, then it is not covered.
But if it doesn't include it?
If it doesn't, then yes. If you're on TDY, if you're on travel for work.
I just had a little trouble reading into some of these, and that sort of stood out. Thank you.
Okay. Yeah. You're welcome. I lost my place a little bit. Personal vehicle use. We prefer MES vehicles be used. We don't have a large sedan fleet, so personal vehicles are used and then they're reimbursed per the fleet policy. And other expenses, there's outlining of lots of rules for different types of expenses that are allowed when on travel and reasons for those expenses. And to be clear, I believe these are upgrades to the policy. There's also a list of non-reimbursable expenses to take away any concept of luxury items while on travel for MES.
I have one question. Some of the allowances are very, very specific, as specific dollar numbers. Lodging is a little bit more ambiguous, and it says at reasonably priced hotels. How do you determine what a reasonably priced hotel might be? Was there any consideration of using hotel reimbursements with, for example, the joint travel regulations, the JTR, the federal rates that they've released, or anything like that?
That's new to me. I mean, just that there is a federal program that we could track to. I've been in other state agencies, it went through a centralized location. MES has done it this way for convenience with, distinct travel and where people are starting from all over the state. But yes, we can definitely look into that as a way to monitor. I don't know. Finance evaluates the receipts when they come back. And generally we're only traveling around the state right now. So I just to stay away from 5-star, I guess is the start of it. But Mr. Coleman or Mr. Patel, if you have anything to add.
Well, I think in general, many times when the reason that employees are traveling is to attend a conference, and it might be a high-end hotel, but they're getting a special rate because they're attending the conference there. And so one of the factors in terms of looking at whether it's reasonable or not is, I think, would be the extent to which the hotel that they're staying at is close to where they have to perform their job functions as well. Because, you know, there might be a less expensive hotel, but it's so far away, there's going to be costs involved in traveling from that hotel to where they're attending meetings or conferences, or they're not eligible for the discount.
Also, this is Hammond. Also, I would add one thing. We the employees who travel frequently, we do ask them to ask for a federal rate. And, you know, a lot of these sites, they are visiting repeatedly. So once we get this federal rate, and then finance will monitor, you know, say, are the hotels charging us the federal rate when we do the reimbursement? But we do encourage employees who travel frequently to ask for a federal rate.
And actually, that there is a specific provision in this policy that requires employees to ask for that rate.
Thank you.
I'll point out too that a couple of things on this policy. One is there was criticism last year with respect to expense reimbursements being submitted many months after the fact. This policy tightens that up considerably. And you'll see in the section entitled Procedures that the requests for reimbursement have to be submitted within 30 calendar days after the expense has been incurred. There's a minor exception for that. If an employee winds up, you know, getting some sort of easy path, not an easy pass, but there are toll roads where they may not get billed for that for a number of months afterwards. But otherwise, if they incur the expense and they have the receipt, they're supposed to submit it within 30 days. The other issue is meals unrelated to travel. You'll see it's in the section entitled Other Expenses. That's been limited. There's a recognition that there may be occasions when employees, particularly supervisors and managers, have to meet with clients. If they pay for a meal out of pocket, then they'll be reimbursed, but only up to the per diem rate.
Any other questions on expense reimbursement? Meal reimbursement policy, overtime, or emergency events. We have events where employees in an unplanned, in an emergency, and they're responding, where they have a need for meal expenses. And we also have a unique situation, Mr. Coleman. I believe this is where inspectors that are on a detail where they cannot leave a construction site for the 12-hour working day. And they are also TDY. They're also travel, where they can purchase food from a grocery store and utilize that food at the per diem rate to meet their meals for that time frame. Is this where that one was, Mr. Coleman?
I believe it might have been on the travel policy.
Oh, it was on. Oh, okay. So this is just to provide employees with consistent and fair terms and conditions for meal reimbursement when they're working unscheduled approved overtime, or during emergency events. So it's just a special reimbursement policy for those situations that are unique to MES. We're not unique to MES alone for state agencies, but not ubiquitous in state agencies.
So the recent weekend effort at ECI would probably fall into this category?
Yes,
Dr. Glass?
Yes, it would.
Okay. Yeah.
Water main breaks also often are through the night, and people stay on until water service is replaced, back online.
Okay.
Okay. And so we're not presenting the fleet policy today. The fleet policy was structured as an operations manual, and so it made more sense to separate the policy from the manual. But Mr. Coleman is working on that along with everything else he does, and we'll try to get that as quickly as possible to you. And so, Madam Chair, you know that the other committee saw them and had a presentation, and then had the month or until the next meeting to finalize. It's obviously it's your call on how people want to approach it and how the committee members want to approach it. But management staff are willing to go any way you want. But we do have a board meeting in November before Thanksgiving, so.
Okay, and I will bounce that to the committee members. How do you feel about it? Would you like some more time to review the recommended policies, or do you want to put a stamp of approval on them?
Madam Chair, I have no problem with these policies. I can't think of anything we would change between now and Thanksgiving. So if you're amenable, as far as I'm concerned, we could approve them. My only question is will the fleet one be ready for December 1st? We may have to take that one up in November because it wasn't presented to us today. So.
Yes, it will be presented to you in time for the approval by December 1st.
Okay, so either way, we approve them all as a bunch. As far as I'm concerned, we could go ahead and improve what we've seen.
Any input, Treasurer Kopp?
I had nothing to add to what Bobby just said. We did, just for the record, we did have them ahead of time and had time to go through them, and the questions were answered, which I appreciate. And,
okay. So I suppose we can entertain a motion. Dr. Glass, would you prefer a recommendation for approval to the full board, or was it okay?
So moved.
I move approval on the policies that have been presented to us today.
Second.
Okay, any other comments, questions, discussion? If not, all those in favor signify by saying aye or raising your hand. Aye. Opposed? Unanimous approval.
Okay, I will send a copy of these policies to the full board so that they can see them before tomorrow morning.
Thank you. And we are now in the section of our agenda where we can entertain any discussions on old business or new business. We can start with old business. We have a relatively new committee, so I'm not sure we have much old business that is lingering. And or any new business?
Madam Chair, I had one question about the internal audits. Do they come to us as a matter of course when they're finished, or is there, having not been from the committee, I don't know the ebb and flow of work. It looks like the finish times are staggered. Will we get them when they're finished at one of our regularly scheduled meetings and then contend with them one at a time?
Yes, sir. You will. Oh, I'm sorry, Madam Chair. I'm sorry, that was
No, I was going to ask you. I was going
okay.
to ask you for an answer.
Yeah. So all of these, there are regularly scheduled with RSM audit meetings at the start and end of the fiscal year, and et cetera. But as we have a newly, the internal auditor has just crossed a year, and she stood up that office. There were several years where there was no internal auditor. I've asked for certain instances for management requested audits, and we'll keep you abreast as they progress. And whenever she's finished with her reports, we'll present them to the audit committee for you to.
And the unscheduled audit, which you requested, Dr. Glass, Will we have an opportunity to discuss that in executive session at our next meeting? Do you
Yes,
think?
sir. Yes, sir.
Great. Thank you, Madam Chair.
And I believe at a minimum, we are scheduled to meet once a quarter, but it's otherwise as needed, correct? Okay. Okay, good question. Okay, anything else for the good of the order before we adjourn?
Been a pleasure. Thank you.
We're gonna miss you, Nancy.
Yeah, you hardly saw me, yes. It's been swell.
So we
Good
wish you all
luck.
the best. It sounds like you have a very fun, exciting chapter of your
Thank
life awaiting.
That's what Mr. Neal tells me.
That's it. It doesn't hurt a bit, believe me.
Thank you. Thank you. I think all I've seen so far has been, Charles, very positive, and I appreciate that. It wasn't easy.
Thank you, Madam Treasurer.
Well, thank you very much to all
Sure.
those who have presented and or participated and or observed our meeting today. And I hope that everybody enjoys their warm afternoon, and it looks like we will see each other again tomorrow morning.
Tomorrow.
So a motion to adjourn?
So move.
Second.
All those in favor? Aye.
Unanimous.
All right.
Thank
Well,
you.
until next time, thank you, everyone.
Have a great day.
Thank you.
Thank you.
Yep. Bye.